Welcome, guys. Good morning. Things are looking a whole lot better, even though last night I said it was a nothing burger. It is normal for Bitcoin to have big volatility drops, right? And look at where we are right now, above $67,000. Okay, so in case you're wondering, $67,000, not that far off from our previous high, all-time high at $69,000. So things are coming back right away, really quickly, as expected. Okay, there's nothing stopping this FOMO train. The ETFs are buying by hundreds of millions of dollars. Okay, hundreds of millions of dollars. That is not going to stop, and I'm going to show you what BlackRock did, and it's just absolutely bonkers. It's not a good thing. It's not a good thing, and it shows you the mentality, the difference between retail investors and institutions. The whales, you know what? Not just you guys, but the whales have been buying. Retail, whales, buying. Well, at least the smart retail, I should say, but the whales are definitely buying. And you can see the holders have increased. Okay, these are the whales. Increased their holdings by 4,177 Bitcoin in the last 7 days. That's 280 million. So, you know, I sometimes when I talk about volatility, like who's causing it, you know, sometimes you just don't know, but you look at who benefits the most, right? That's rule number one when it comes to detective work. Who benefits from the crime? So who benefits from a large crash like yesterday, a sudden crash? Well, people that want to accumulate, right? People that want to accumulate by hundreds of millions of dollars. So that's why I always say like whales and market makers, you know, they include exchanges and firms. And also, of course, we got Mr. Larry Fink, who benefits tremendously from a crash. So if you guys thought that maybe Wall Street caused the crash yesterday, well, maybe they done so through other means. But the numbers came out from yesterday's ETFs, inflow and outflows, and the numbers are mind-boggling. Okay, on a down day like yesterday, where Bitcoin dropped 15%, guess what? The ETFs had their largest inflow since day one, 648 million. And here's more staggering. Do you know how much this guy bought? BlackRock bought 12,447 Bitcoin yesterday. Almost 13,000. What does that equate to? That equates to $788 million going into BlackRock's iShares. So here's the difference, and I always explain this, the difference between institutions and retail investors. When people are panicking about retail, or when retail are panicking about Bitcoin's price or dips, institutions, they don't give a F. In fact, they take opportunity to buy more and accelerate their buying. Look at, they bought so much yesterday. It was double what they purchased on Monday. And now look at their overall number, 183,000 Bitcoins. That's only 10,000 behind MicroStrategy. This is why Michael Saylor is getting pretty worried. That's why he's trying to raise another $600 million to buy more Bitcoin. $600 million is nothing when BlackRock has spent $800 million to buy Bitcoin. This is my warning to you guys. I've said this before and I'll say it again. This will be the last time. This will be the last cycle, last time for regular average Joes to accumulate a significant amount of Bitcoin. After this cycle, after Bitcoin breaks $100,000, it will be virtually impossible for normal people, the working class people, to accumulate any significant amount of Bitcoin. It's going to become too expensive. That's the reality of it. That is the reality of it. You could argue that it's already too expensive at where we are, $67,000, $68,000, but it's not going to stop. And if people are still thinking that, well, the ETFs will slow down, they already accumulate so much, this is nothing. This is nothing. BlackRock holds $10 trillion worth of assets. Fidelity holds like $7 trillion worth of assets. Trillions with a T. And there are major institutions out there that are all buying. The amount of money out there in the world is so vast we can't even picture it. Bitcoin barely broke above 1 trillion itself. But there is so much money that's FOMOing in right now because for good reason. Number one, it's the fastest growing asset. Number two, people are sick of inflation. Even institutions and big publicly traded companies, they're sick of inflation. They want to hedge against inflation, and gold no longer does that. Bitcoin is the best hedge against inflation, no doubt about it. It's also the only asset that has a max supply. There's nothing else on the planet that does. So that's why everyone is FOMO in. And of course, seeing the price go up literally every day also helps with that. But this is not going to stop, guys. We may have more volatility days. We may have more up and downs as we move forward. But that's just know that it happens because a lot of big players want your Bitcoin. They want you to sell. We are moving so fast in this cycle. I've mentioned this many, many times. Just a few other things. Look at where we are in the current cycle versus one of the previous cycles before. This is how it's supposed to be. We have accumulation stage. Yep, we did. We have this halving event that's coming up, very significant. And then you could see, we generally start moving upwards, but we don't break our previous high until the green mark, which is the parabolic bull run. You could see how this cycle looks very different. We're not going sideways, slow rises. We're just doing this now, right? We have reached that parabolic cycle or phase, and we still have several. In fact, we're so ahead, like at least 6 months ahead, 6 to like 10 months ahead. Because looking at when that parabolic cycle started, that was 2017. So that was the year after the halving event. This time around, we are just so ahead of the game because of all the accumulation and the FOMO, the ETFs and everything else. Okay, so that's what's happening right now. So, and I think we know that. We see it. Right? You guys are excited. I'm excited. Everyone's making a boatload of money right now. But it's going to get better.